Yo, what's up, everyone? Welcome back. This is update number 27. The account is down about $500 from last week, as you can see. But if you haven't seen any of the other videos, this is my entire M1 account. You can see my M1 net worth, $83,600. And this M1 net worth is made up of two portfolios, this being one of them, titled 2030 Aggressive. There's a small position in Apple, which is down 7% for the week. And then the rest of it is in this 2030 Aggressive Pie, which is down 0.33%. And this is mainly, this is an expert pie that's offered through M1 Finance. But as you can see, it's a bunch of ETFs, mainly through Vanguard. So this is the more passive side of my investment strategy, I guess you could call it. And so that's one half of the M1 account. And then the other half is made up of this portfolio here, which I titled High Dividend. And this is made up of a bunch of individual stocks. So we'll go through them one by one. Lockheed Martin down 6%. Walgreens 4.5% almost. HPQ 3%. Warner Brothers Discovery 2.6%. This position was a spinoff from AT&T. I didn't actually purchase this on my own, but I just when they spun off AT&T, I didn't sell them, so I just decided to keep it. American Financial down 2%. Best Buy 1.58%. T Rowe 1.37%. WP Carey 1.1%. Coca-Cola 0.8%. Home Depot like 0.5%. Procter & Gamble about 0.25%. AT&T 0.14%. And then these stocks, I guess, are up for the week. So 3M 0.29%. Citigroup, as you can see, if you haven't seen any of the videos, 3M is probably like the largest position I have. I think it's somewhat of a turnaround play. If you've read Peter Lynch's books or listened to his audiobooks, there's I think 6 categories that he places stocks, and being a turnaround is one of them. So this business is down pretty bad, even from the 5-year mark, down nearly 50%. So 2 years is down 41%. So I think this is a turnaround play. I think 3M is still a good business. I think they have still quality products. So, I think they'll turn things around. But anyways, continuing on, this is Citigroup up 0.7%, Mo Altria 1.7%, Johnson & Johnson 1.8%, Cisco 1.8%, Costco 2.58%, and Old Republic International 2.75%. I didn't go, actually, I need to go over the activity, but I also go over the activity. So if I did any buys or sells for the past week, I'll go over here, and any dividends. Looks like here I didn't have any buys because this one was, actually this is just a deposit, but looks like I just had some dividends. So $9.85 from Johnson & Johnson on September 7th, and then on the 8th, $1.96 from Costco. Let's go to the other portfolio real quick. So in this one, I just try and invest every day if I have money to invest. So if we go to the actual portfolio itself, you see here the buying power. Whatever I have in there, I try and spend throughout the week. So tomorrow, like I'll put in a buy order right now, actually, before I forget. So usually I'll do it in increments of 25. So I'll put 25 for tomorrow. Actually, yeah, I'll just do it just to keep it the same. So if you go to my activity log, you'll see from 6 days ago, so the 7th. So we had 2 buys. If you see like a $50, probably because I missed the previous day. So that's why I had $50 worth. And then here, $25. Or just about, And then on the 12th, same thing. I forgot the day prior, so I invested 50. So this other one this buy will be executed tomorrow in the morning. But that's all the that's all the activity, right? Oh, well, these dividends I didn't go over, but this tips I shares. Treasury inflated. I don't even remember what the tips stand for, but let me see. Yeah, there you go. U.S. Treasury inflation protected securities. That's what they stand for. So $4.17 from that one, and then $1.51. I think this is just a Treasury bill. Yeah, a 1 to 3 month Treasury bill ETF. So that's what that is. Now let me go over a comment that someone left on one of my other videos. Let me pull it up. All right, so here it is. My boy Discovery and Change. Um, I asked him if he had read any books about investing, and he uh, he said this. I've read previews of John Bogle books and a preview of The Intelligent Investor. I've also heard Peter Lynch books and lectures on YouTube. So I'm in almost the same boat. I think I've heard one interview of John Bogle. If correct me if I'm wrong, but I believe he's the founder of Vanguard. Um, and I don't remember who was the interviewer or if it even was John Bogle, but I think that was what I listened to. And then The Intelligent Investor, I have read it. I think it's a good read. It's not too hard, but I think you do have to have a little bit of a basic understanding of kind of like financial terms, because I think Benjamin Graham, the author, he goes over, you know, the financial literature, and there's some things that I didn't understand. I had to, stop reading the book and look up some of the terms. So I wouldn't say it's an advanced read, but it's not a beginner. It's maybe like intermediate or beginner intermediate, but it's still nonetheless a great book. And then Peter Lynch. I mean, if you've seen the other videos, Peter Lynch is my favorite investor. I like his style of teaching and his style of putting out the information uh, regarding investing in stocks. I started off listening to the Peter Lynch, the audiobook of Peter Lynch, One Up on Wall Street by Peter Lynch, here on YouTube. I posted the link to the audiobook in one of my other videos. I'll post it in this one too, but I'm not affiliated with whoever posted it, but I'm just trying to share the knowledge here. So I'll put it in the comment or description or both. And then I also have seen his lectures. I think they're great. He's a funny guy, and like I said, I find it entertaining when he talks about investing. But continuing, uh, Discovery and Change says, what I've gotten out of it, new plan now is to follow the Bogle advice and buy index funds instead of choosing individual stocks. But I know a lot of great stocks significantly outperform the indexes. I suppose I could always buy both though, indexes and individual stocks. So I agree with this too. I think if you're not going to do the research, or if you're just starting out with investing, I think indexing or investing through ETFs is a great start, even through mutual funds, just to get your foot in the door. But definitely, the more you get interested, if you're like me, I got interested in the idea of owning individual businesses, and so that's why I started picking stocks individually. But I didn't always start out with individual stocks. I slowly shifted my focus from ETFs only to individual stocks. So um, the individual stocks do make up these indexes. So yeah, the index is just going to be the average of the high performers and the poor performers. So yeah, if you select the good ones, that's the trick. Select the good ones, you'll definitely outperform the market. But um, I think it's a good idea, yeah, to mix both. As you guys can see through my own portfolio, I got 50. Not exactly 50%. It's probably like 60-40. Like about 60% of my account is individual stocks and 40% is ETFs, because I've come to realize that I'm not as great of an investor yet to where I feel comfortable having my entire M1 account in individual stocks. So I'll get there eventually, but right now, I'm still splitting it. Whatever I invest, 50% goes to the passive portfolio, which is the 20/30 aggressive one, and then 50% goes to my actively managed, I guess you could call it, the individual stock portfolio, the high dividend, the one that's titled high dividend. But yeah, you could definitely do both. You can start off 90%, maybe 90% ETFs and 10% stocks, and then just work your way down if you want to keep investing into individual businesses. And then lastly, he says, I'm going to have to dig deeper into your videos to come up with more specific comments as questions related to your stocks and purchases, and see if I can learn something and or get new ideas. I'll be tuned in for the next update. So yeah, I appreciate that, man. This is exactly what I was talking about. This is exactly what I envisioned when I started posting these videos. I wanted to have conversations with other investors and also learn from others. I obviously don't know everything, and I would consider myself a beginner as well. So I'd like to get people to bounce ideas off each other, and maybe you see something that I don't, or I see something that you don't, and then that way we can both learn. Everyone can learn. I post to just give back to this community, because thanks to this, the financial community within YouTube, I was able to um, invest on my own. So I really appreciate that. I appreciate any comments that you guys leave, and I hope that we can continue to have you know discussions about stocks and questions. That way more and more people can get reached, and more people can set their future up for financial success. But anyways, I've gone on long enough. Appreciate it. I'll see you guys in the next video. Peace.